on to the next episode, episode 13. So tracking gold, since our last video, a lot's happened. And more or less gold has broken out, as you can see. I've took some of the previous, just generally neatened my chart up a little bit. Took away some of the old areas which are no longer more or less in use or suitable. So, as you can see, gold absolutely skyrocketed. So let's just look at this daily time frame first and foremost, because it's quite important as to where price has been and maybe even where price is going into the new year. These are all old areas. Okay, let's move them for now. All right, so firstly, remember the week. And in some of the previous videos, I did mention that this was a complete and utter trap. We broke the weekly area of support, but then we halted. We made the low here at 1445. And you can imagine how many traders thought gold is now reversing, especially after that weekly candle. And as you can see, price has, well, it did consolidate for a while. I've tracked this on previous videos. Bullish move to the upside. That was key. We took out 1, 2, 3, 4 bodies. The next week, we tapped into 1480 resistance. Brilliant level there for gold. And then afterwards, this week just passed, we've absolutely skyrocketed all the way back up to the highs. Now you must remember that there's going to be a lot of stops above here from those who are going short, and a lot of interest for orders to be taken out, again, from the mass accumulation of orders to the downside, especially again at the end of this candle here. So I do believe that after this week and into the next few weeks, we're going to be revisiting 1550 and maybe even beyond. Daily, at the lows, we did track price relatively well down here. As you can see, we came into the 1480, we came back to the downside, pulled back up, smashed through 1480, left the wick, back to the downside. All of the bodies of the candlesticks right here, as you can see, remained below. I remained lower than 1480, and then we started to more or less edge higher and higher. Moving averages did cross over here on the daily, giving us an early insight as to where price may be headed next. Spike in, pushed back to 1480, indecision here, and then boom, that was a breaker candle right there on the day, signifying that upside is inevitable for this metal. And you can now see we've come back into more or less 1515. If I place the area at the top of those candle bodies right there from previous structures, we can see that we've tapped into that now, and we can maybe pull back before going higher over the next few weeks. Going into the 4-hour time frame, throughout all of this mess, we were more or less in chop zone, chop region. If I just go ahead, get the trend line, put that one there on that body, you can see that we more or less have this range, if you will, where gold was trapped into the high, into the low, into the high, and then we were edging higher. We had this prominent low which was formed. This was evidently a simple trap move. The MAs were also crossed to the upside in this scenario right here, and this is more or less where the daily moving averages crossed over too. So we have two confluences there just for MA crosses. But again, what I've just explained on the weekly and the daily, our thesis for gold and our bias, if you will, was in fact to the upside and to complete a bull move. Breakout, retest on the MAs, and this finger just edged higher and higher. Prominent area which was taken out, 1486, cleared, complete, and then we also had this one too on the miniature lower swing high after this price dump. That was absolutely smashed out. And as you can see here, to the accurate degree of a T, gold had 1 push, 2 push, 3 pushes on the 4-hourly and is now pulling back. So something to look out for into next week, a nice pullback on gold. So that's more or less a 4-hour scope, sorry. More or less taken into consideration and explain that. Very, very simple, very straightforward. Now, the last video we did leave on, okay, sorry if I just go all the way back. This move here, this boom, this downside move was this, guys. Oh no, sorry, this move here, this is where we left off. Pardon me. We left off after this. Now this move, we took out 1480, but we didn't stay above it for long. The session crossover happened into the US session. A little bearish engulfing candle formed there, and then market absolutely snapped. You remember that I explained the thesis behind all of this, and on the last video, where the price was here, I did suggest that I'm looking for an upside move. We did have some chop, which is just general, low volume, liquidity coming in and out of the market, stops being taken, all of that mumbo jumbo. But at the same time, you can clearly track some of the main areas. So the London high the week before, translated that over where we had the tap here, retest there. We broke through that, but we also went into this area, which was this high here of the week. So those areas remained trustworthy, if you will, for the gold tracking going forward. And we had, again, we had a nice little sell-off at the high there. Spike through, again, trap move. Look at these spikes, trap, trap, trap. Market pulled back up and beyond into this session here, into Asia. We rebounded to the high. A little bit of a mess there. And again, I was kind of 50-50 about the outcome at this period of time, because the expectation was, could we come back down to one of our previous key levels? And again, you can go recite one of the other videos for my full explanation on that. But we didn't. We came back to the upside. MA's crossed over here, 11th of December, and remained converged to the upside in that process. Now, with that being said, a lot of mess was going on. Low test fake out from the news there, as you can see, right into the low. Came back above, but you can see here, again, you can stop the video, you can go and track this yourself, and you can see where all of these areas were respected quite well. Market started to level out a little here, which was relatively interesting. We do have the 1480 level upside, but I did mark on, this is when we came into the US session. This is the Monday US low, Monday US high at the start of the week there. In this process, we went from highs to lows, and I just marked this barrier on. So we had upside and downside barriers, which were respected again throughout the week. We had a small fake out there, but on that fake out, look where we tapped into. We went into the 1480. Now, if I go back and I just translate what that tap looked like on the higher time frame, it was right here. So I tap into it, consolidation, messy PA. This was building up for the move that it's just came and displayed for all of us for a good, I don't know, was it a few weeks? A lot of trap moves to the downside before this explosion happens. So you can imagine the market psychology of, okay, let me try to get as many traders short as possible before this sudden explosive move comes to light. Anyway, going forward, we can see that respected zone once more. I put this mini area on here too. That was in Asia just before the London breached that area right there, came into the previous US high and dumped. Now this, evidently a huge trap. Bullish engulfing, bringing that back into the US session there. So London dump into the US, and again, look at it, it's just a mess. In this scenario, this is a 15-minute chart, but a 5-minute scenario, a 5-minute time frame would suit you if you can adapt to that. Again, you have to be relatively on point to do so. But in these times, if you are advanced and quick on the mark, and you have clear head, and you've got your space there, and you've got dedicated trading times, you can actually take advantage of these moves on the 5-minute and the 15-minute. Evidently, you can see where we have a lot of rebounds and so on. But when you start to track the market like this, as you can see, gold is a trickster. Now, with that being said, you will be able to see clearly the false moves. Again, we had a very, very strong bull bias because of what I've gone through in the previous videos, and also what I've mentioned at the start of this video. And any move to the downside, which is as volatile as this, you don't want to jump onto, and you can see the ranges and see the areas clearly. Okay, Monday US low, breached back in the range. Oh, absolute trap. We come forward, test, back to the test area here on the US low, come back in on Asia. Asia makes a low. Asia pushes back into the high of previous, comes back forcefully into London. London pushes it down. 1, 2, 3 areas of rejection there as well. Asia low taken out. Asia low spiked again, and then we go to the upside. Breach 1480 for a small period of time, and then the entire market cycle kind of changes in this instant. So we have, if I just use this and we utilize that high right there, okay, boom, we come through just before US session. So that's a London high. We bring that London high all the way across from the body up to the top wick, and what we see there is now market's transitioned a little higher, and it's more or less consolidating in a higher stance and state than it was before. This was very, very wide. Then here it gets quite narrow. So in this narrow area across here is this price buildup. Now, this forceful move to the downside was in fact this candle right here. The previous one the London trap. This trap there was this one, but if you use multi-time frame analysis as to what I've showed you, you can see that, okay, there's the bodies of the candles, the 4 hourly, it's driven right into that and it's pushed back above. So warning. And even if you wanted to go into detail as well, we can mix it up a bit and go from the high into the low there, and we can see that's a clear rectangle range being formed, and then we break out of it ever so clearly. So going back over to here, we tested, okay, London high, boom, 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 consolidation, consolidation, and we use this area as clear-cut support in various sessions. Boom, back to the upside, broken through, retested into 1480, and then the market absolutely went for it. So I haven't, you know, I've been chilling over Christmas. Really, I caught 2 trades on gold. One was on the breakout, and I had another carry trade. I think it was around here, but I didn't hold this entire move. Don't get me wrong. I wish I did, but throughout Christmas, and you know, the market was thin in volume and liquidity, I was just taking small profits, and I left gold alone. And yeah, I mean, coming into this, let's just track out the last few days as I did in the previous episode with GBP AUD. So let's start at 8 a.m. over here. And then we go to 1400 hours, then we go into 00, 8 a.m., 1400, and then let's go 00 there. Let's just have a little look at where gold is now and where it's headed to and where it's going to pull back. So on the, as you can see here, MA's remained crossed over to the upside for quite some time, and we were rebound up there too. But we've been pushed into that zone, which is going to break. I can tell you now, the gold is going a lot higher now. 1550s and above and beyond that into maybe the next few months. But let's just go into detail here. So what we had was in this London session, that's the London low there. That would have been a nice point of call as a barrier, or even a potential target to the downside. If, when, well, not so if, there's a high probability chance that gold will pull back and it could come and test this region here. But let's continue. London high is right there on them 2 wicks, bringing that across. Right there. So we have London high. We come into the US session. US makes a high, and the US high is there. I'm going to take it off the back end of that wick into the body and across. And from there onwards, we also have this area high. Low into the high. That's a high there for that session. But then we also have this low. The real low of Asia came back into the London high, which was also the US low. So as you can see, we're playing this range again, and for a few sessions we've had a little bit of a time in which the market's consolidated. It looks a little bit congested, but it is edging higher. So we have drive 1, drive 2, drive 3, and now I do believe that gold can maybe push high, and then into next week we can fall. But to the downside, we can now say, okay, I have this area and then this area as target zones. But remember, the bias on gold is bearish. Now, don't get me wrong, we can come all the way back down to test the high of that wick, the peak of that wick, before going higher, 1494s. So we can use that as a potential confluence going forward. But the way this is holding up on the daily time frame and on the weekly time frame in particular, look at that. Beautiful. MAs are still converged. We bounce off the other MA here on the weekly as well, and we are now going to be heading into 1550. So gold is long on any pullbacks, to be honest, but as you can see, it's just edging higher as time goes by. Going into the 5 minute, as you can see here, a couple areas where we could have taken some positions here on the breakback below, here on the rejection, but these are very, very short-lived. But the 15 minute is explaining things very, very well and in detail. And again, with clarity, guys, you can just continue to put this together. There's not as much to go into over here. We do have highs and session lows, but that's for you to go in and put the chart time in and work that out. But when the market's trending, cleaner is obviously that was a hard market to track and trace. Don't get me wrong, and so was this. This keeps you on the ball. It keeps you thinking. If you can survive this and find setups in this kind of field, then this here is a breeze to you. Is a breeze. And again, always just revert back to the higher time frames to see, get the bias right. Again, I was not convinced on any shorts whatsoever into all of these price drives to the bottom, to the downside. And then this is the result of the analysis over the last X amount of episodes, and we're looking to go higher now on gold. So again, keeping it simple, keeping it precise and concise, and we have our areas in which we actually trust, because you've seen this play out over and over again now. And we can build your confidence going forward. So I hope you enjoyed that video. That's it for 2019. It's been one hell of a year. I wish everybody the best success throughout 2020, and we're going to be coming with more fire over the next few months. But again, chart time, keep the pairs down to a minimum. Practice, 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 and once you have that confidence there, your psychology aspects will in fact merge with the entirety of the picture of trading. So thank you.